Welcome back to Golden Rule Radio, your source for all things precious metals. Tori is joined by Miles and Robert. Today is March 8th, 2017, and we're going to jump into listeners' questions. First one, Moises Ortalaza. I hope I'm pronouncing that correctly. Where can I buy silver? Moises, right here.
Yeah, I personally think either Tori or Robert are good options to buy silver. I work too, and any one of our brokers here at ICA.
800-525-9556, Moises, and we'll walk you through the process. Also, the McAlvany Weekly Commentary gets listener feedback, and last week Eric Banks asked a question, or made the statement actually, I say commodities all take another leg down after 12 months of consolidation. Crude base and precious metals looking like new lows coming. Crush the late buyers and test the will of the early buyers. Feedback in that regard, guys?
Yeah, Tori, I pulled this question off of our sister podcast, The Weekly Commentary, because this is something we have come up a lot with clients, especially looking back at the 2008 market move up. In 2008, when the stock market started down, gold actually came with it. We had gold run from above, about 1,050 down to, I think, around 660, before we went from 660 up to over 1,900 in less than a year.
It's true, Miles, and I remember it obviously very well. We had an excellent entry point at those levels, and quite honestly, we did see the will tested, per Eric's question. We saw the will of the investor tested in the precious metals arena as well, and quite frankly, they were very rewarded, not only monetarily or nominally in their value, but also in regards to their resolve to look at the big picture, the big macro viewpoint.
And this is definitely where you start to differentiate between owning physical precious metals and owning futures contracts, options, or mining companies.
Even with spot gold at 660, that bottom back in 2008-09, you couldn't buy physical metal anywhere close to that.
In fact, if I remember correctly, we were running waiting lists for a period of time.
Even on 100-ounce silver bars. And I remember the 1-ounce silver American Eagle premium was at 40% over spot. So we wouldn't sell it, right? Remember that? I mean, we would not let our clients step in because they had so much of an upside move to realize before they actually got into the black.
Yeah, just to break even. So it's a heck of a thing to remember that when you start seeing the metals prices go down, it's a good idea to touch base with your physical metals brokers so that we can look at the comparison between how the paper market's doing and how the real market's doing.
Preferably us if you like this show, right?
That's right. That's why we do it. What about gold specifically, Miles, this week?
Over the last couple weeks, we did talk about a potential B-wave correction in a number of the metals. Gold is showing this pretty aggressively. We showed a high point based off Fibonacci levels around 1255, and we hit that number pretty strong and have come back down. Last week, I said we should see strong support around 1205, and we're just coming into that now. We can push below that, maybe around 1180, and then of course if we go below 1180, I think somewhere in the 1140s is a definite stopping point.
That's a good step back, and we had also climbed aggressively above the 50-day moving average, which is something you can look at, but we tend to again focus more on the bigger picture. For our clients only this week, we've generated a video on the 65-week moving average, and we're happy to share that with you if you give us a call. But that was something that we sent out to all of our clients this week just to, again, point them to the long-term, bigger picture.
Speaking of the bigger picture, I really want to direct people to the McAlvany Weekly Commentary this week. If you have never seen a Dow Gold chart and fully understood it, that is an essential part of your understanding of the markets, whether that be one market gold, the other market stocks. What that's doing is it's showing the stock market in relation to gold. And a lot of people are looking at the stock market right now at an all-time high above 20,000. But if you were to have simply just owned gold for the last 15 years, you would be up more than 100% over what you would be up if you were in stocks. I looked at the stock market bottom around 2002, 2003. If you would have timed it perfectly and bought the bottom, sold the top before the crash of 2008, and then bought the bottom in 2009 and sold the top where we are today, you still would be shy of what gold has done in the last 15 years. That is incredible.
There's a reason we keep harping on these relative value ratios, whether it's gold and silver, whether it's platinum and palladium, or in this case, and what David and Kevin talked about this week that Robert just alluded to, the Dow Jones versus gold.
And to take a ratio step one step further, I mean, seeing the undervalued aspect of silver, what's it doing, Robert?
Silver is pulling back like gold. And if you've been listening to us over the last few weeks, we've been hitting some good numbers, guys. I really have to say, Miles, your chart work has been great. And we ran into resistance with gold around 1250, like we said. We are now in a B decline. And that B decline is your opportunity to be getting into the market, into the metals market, before we have another strong C wave up.
Which will surpass the A wave ascent that we just witnessed.
Correct. Silver ran into resistance around 1850 and started pulling back. And last week's show, I think we mentioned 1770 as support, and it stopped there, exactly right there. We're looking at support around 1720 now. Silver, again, we are extremely bullish on. And in this B decline, this is your opportunity, people.
Moving on to the other white metals, platinum touched the 950 support we mentioned. That level was strong. We're going to push below that, it does appear, though. There's small support at 935, but honestly, the next major support isn't till about 900. Palladium, still stuck in a channel. Perhaps declining. I think we could have a slow burn down to around 743. All right, moving on to other markets. Miles, lead the way into the Dow for us.
Dow Industrials finally showing a little bit of respite after the rise. They failed to break 21.2. There are a couple gaps I like on this chart that I think the Dow will fill. So I do think we'll see a little bit of down movement over the next couple weeks in the Dow Industrials.
We had 12 straight days up, followed now by at least 4 straight days of decline, trading days. And so, topping at 21,115, we're off over 1% in the last week.
Regarding the transports, we're starting to see a little stair-step pattern up, which I think is going to lead into some down movement there. So the transports tend to lead the Dow. So if they begin to move down, I think that Dow decline we just mentioned is soon to follow.
The dollar is pushing into that 102 resistance level, Tori, and we'll see if it holds.
I told you when I spoke for you. So certainly the currencies impact the metals markets. That's why we try to touch base on them. And currencies and central banks go hand in hand. Next week we have the FOMC meeting. Should be telling in terms of what they do. Quite honestly, Yellen and the Fed have a problem, in my opinion. They're hiking rates with the U.S. economy rolling over and inflation at the highest level in years. So whether they do not raise those rates, we're about to find out. But President Trump's on the record as stating that Yellen and the Fed protected Obama, and Obama will be on the golf course when the Fed hikes rates and hinders the economy and goes against his growth plans.
Well, and don't forget, we also have the debt ceiling expiring again next week on March 15th, which of course will hit. It'll expire. They'll make up something like Obama did where they shut down part of the government, the Parks Department or something for a week, and then they'll just raise the debt limit and increase inflation again.
What a joke.
Predictions?
I just gave you mine. They'll shut down the Parks Department and they'll increase inflation again.
I think they give them another spell and the glass ceiling remains intact. There won't be a ceiling for a while. All right, so before we leave the economy in general, monthly non-farm employment report out of the BLS is this Friday. They've set their estimates down 18.5% lower than the previous month. And you often hear pundits on TV talk about beating estimates. Well, what about beating the previous month? Just another indication that we really are due for a downturn. All right, this week's recommendations. How about you, Robert?
McAlvany Weekly Commentary covers the Dow Gold ratio. That is essential. Go listen to that. You will understand why we keep harping on that if you watch it. And then I would suggest sharing it with a friend. Make sure that you understand it, learn it, and then go teach it to someone.
How about you, Miles?
Buy as much silver as you can under $18 an ounce.
I like them both. So my recommendation for the week, call us, 800-525-9556. The receptionist will get you to an advisor for that 65-week moving average video. It is exclusive for our clients, but we're happy to share that with you in an email. And on behalf of myself, Robert and Miles, we thank you for tuning in again to Golden Rule Radio this week. Send us your questions. Make sure to follow us on Twitter at ICA Gold. Subscribe to us by clicking on the subscribe button below this video. But most importantly, give us a call. Again, 1-800-525-9556, and we'll walk through your individual portfolio with you.
Thanks for listening. We'll see you next week.